Hey guys, welcome back to the channel. I hope everyone is doing well. So it seems like I have return on capital OCD because I thought, oh, the Proshares ISPY recently had a dividend, so I'm thinking, oh, should be pretty easy to figure out like what the return on capital is. And unfortunately, I can't crack the code, at least not yet, because I'm still kind of flustered as to how the heck is this return on capital calculated. So let me explain. So, like I mentioned, the ISPY had like the first distribution recently. So 48 cents per share seemed pretty reasonable, right? So I'm thinking, well, the ex-dividend date was February 1st, so maybe like the cutoff was January 31st, 2024, which seems like a reasonable assumption. And the net asset value was $40.70. So that's about a 1.1% payout for the month or 14% plus annualized. So far so good, right? But then I look at the ISPY, like the return on capital document. So the total net asset value change since December 18th, 2023 was about 73 cents. But then when I look at this document here, now again, keep in mind that this is an estimate and it'll probably change like over the course of the year. And I'm actually fine with that. But when you take a look at like how like the distribution is separated between like the investment income and then the return on capital, it's a real head scratcher because the investment income is 6% and then the return on capital is 94%. And just right off the bat, that didn't seem right to me because like again, like the implied payout ratio. So I'm assuming, okay, so they paid out like 48 cents divided by the 0.73, the total net asset value change up until January 31st. That's about like two-thirds. So okay, so they're paying out two-thirds. That seems reasonable. And I'm assuming like one-third is, I guess like kept in reserve for future months. And I'm fine with that. That seems pretty reasonable. And it seems like it would be enough. And then you have a nice leftover for the next set of months. So that's why it seems so frustrating. So I'm thinking of maybe the scenario one, like maybe the date cutoff is earlier. So maybe if I assume the payout includes up to January 31st, but maybe it's only up until like January 17th, the 18th, or the 19th. Maybe like about like 1 month like lag. So I'm thinking maybe that could be one of the reasons why the numbers seem so off. And then scenario two, the net investment income seems pretty low, and at only like almost like 3 cents a share. I'm wondering if it includes only the option premium, or maybe there's like a timing because like technically it's not like the traditional option premium that you see in like other covered call ETFs. Maybe this is because it's a total return swap. So is it settled daily, weekly, monthly, or maybe quarterly? So maybe there's like some type of like time lag here. Or another thing that could be part of like the net investment income, maybe that any capital gains or losses from like rebalancing might be put off into the future. I mean, you can't pay out like capital gains until it's actually realized, so maybe that's part of the reason why there's such a discrepancy. And then maybe like the third scenarios, maybe I'm using the net asset value change isn't totally correct. Like the net asset value might not be granular enough because like net asset value change could be due to also like the investor, like the cash inflow like in and out. So maybe thinking like that might be part of the issue. And I don't know, this feels like a big womp womp for me. I guess like I maybe I shouldn't be so focused on return of capital, but it's just one of those problems that maybe I'm making it like bigger than it should be. I guess it's just like one factor when comparing ETFs. I guess like the thing to keep in mind, your overall yield on cost basis is the most important thing. Yeah, but I also like to keep an eye on like what your neighbors are doing as well. So I don't know. Again, maybe if there's an accountant or maybe a tax attorney like amongst my subscribers or like even just like the overall high yield viewer space, like if you can let me know in the comment section if maybe I'm barking up the wrong tree or something. But I do want to say like ProShares has a pretty good net asset value spreadsheet. You can go in there and like click on it, and like you can also verify like my findings as well. Because I what I find interesting is that they kept like like a the a good like history of like a net asset value, and then also like the assets under management, like shares outstanding. I think to me, this is probably one of the better like record keeping that I've seen so far. So they even do like the calculations like the prior NAV and the net NAV change percentage and things like that. So what I did was I just took like a kind of like a running total just to see like up until like a certain date, like what like the total net asset value change would be. So remember when I said like, oh, maybe the cutoff is not really January 31st, it might be January 19th, because I guess like 48 cents and 54 cents, this might be like the closest one. So maybe there's like some like another timing thing. And then also maybe it's not the 48 cents that I should be worried about. It should maybe be the 3 cents. So I'm thinking like the next closest thing, like the net investment income, will be like the 6 cents over here, and that was like January 17th. But again, I hate to play like these type of guessing games. I just want to know like how they're actually calculating. And it's not just like Proshares, by the way. This is basically any ETF company that has like these so-called like high yield option-based ETFs, and I think that would be like a really great help. Like I mean, so far like Yield Max Defines and Proshares, they have like pretty good transparency, but I guess like maybe in the future, like maybe I don't know, someone can figure this out. Like because this is a real head scratcher. But again, I guess it's still a good time to be alive. I guess this is more like a nitpicky thing for me. It's more like an accounting and finance dilemma. I guess like for most investors, probably it's not the end of the world. So I think like overall, like the competition is good for the space in terms of not just like the price performance, but also just like little things like the transparency. Like things like this go a long way in my book. So anyway, in general, I guess like implied volatility could collapse. So none of these option ETFs are like immune from that, and they can definitely get cheaper, as you can see from other ETFs. So, but don't let like dumb pandas like scare you away from a good yield. I'm not saying like there's anything wrong here. It's just I just can't figure like this return on capital math here. So and it's kind of embarrassing. But anyway, if you like this type of content, please consider giving this a like. All subscriptions are welcome. I hope people make some good money out there, and I'll see you in the next one. Bye now.